Hello, I'm Charles Guinn, and I'm a certified aging in place specialist. Today, I'm going to share with you the 3 ways you can get hurt by a reverse mortgage. If you're looking at this video, most likely you've seen articles or heard about people losing their homes after getting a reverse mortgage. Also, you may have seen the old actors on TV telling you how great it is to get free money with a reverse mortgage. Just call the 800 number. And you probably think something just doesn't seem right. You may wonder, just how do people get hurt by getting a reverse mortgage? Well, here's the truth. The worst thing that you can get from the actual reverse mortgage is a paper cut. That's right, I said a paper cut. You see, a reverse mortgage is just a contract on paper. It's not the contract that hurts people, it's the loan officer that hurts people. I'm going to share with you the 3 ways reverse mortgage loan officers can hurt you. But first, let's look at what a reverse mortgage is. The first thing to know is that it's just a mortgage loan. And like any other mortgage that you may have had, there's a note and a trust deed. The title stays in your name. The bank does not own your home. Reverse mortgages were designed so that folks 62 and over could use some of the equity from their home to help pay their living expenses without having a monthly payment. It's needed because as we get older, our income may be limited, and most of us don't have enough savings to have a comfortable lifestyle. If you get a traditional loan or line of credit from the bank, you have a monthly loan payment which further reduces your monthly money, making your situation worse. With a reverse mortgage, you have access to money to use when you need it, but you are not required to make a monthly loan payment, so it doesn't reduce the money you have for your living expenses. It's not free money though. There is interest. The monthly loan interest is added to the loan balance, so the loan gets a little bigger each month, and it has to be paid back. It's due when the home is no longer your primary residence. And of course, you have to pay property taxes, keep it insured, and maintain your home just as you would even if there was no loan on the property. There are more details that are interesting and that you need to know before you get a reverse mortgage, like how the line of credit works and what happens when the home passes to your heirs. I will cover those in other videos, and you can go to my website, charlesguinn.com, for a detailed explanation. For now, let's just stay on the topic of how you can get hurt by a reverse mortgage. Some of the complaints people make about reverse mortgages are the same that they make about any mortgage. They stem from buyer's remorse. You find people saying, "I wish I hadn't got a mortgage," or in this case, a reverse mortgage. Usually they forget that they wanted the money and that they spent the money. Now they just don't want to have to pay it back. It may or may not have been a bad decision at the time, but that's not one of the ways people get hurt. Here are the 3 ways you can actually get hurt. First, the loan officer convinces you to take more money up front than you actually need. For example, a woman came to one of my seminars, and afterward she told me that she had a reverse mortgage and that she'd learned something she didn't know about her own reverse mortgage. And that was that she didn't have to take the money up front. She told me she saw the TV ad and called the 800 number. She told the phone salesman that she needed $50,000 to pay off her credit cards. She was told that she qualified for $250,000. So she proceeded to get her loan over the phone. When the loan was closing, the phone salesman told her that she had to take all of her money up front when the loan closed, the full $250,000. Of course, she did what he said she had to do. When I met her, she had her bills paid off like she wanted, but she also had $200,000 sitting in the bank making virtually no interest, and a $260,000 reverse mortgage accruing interest each month, eating up the equity of her home. With money in the bank like that, often people have a tendency just to spend it and have nothing left after a while. The fact is, you don't have to take all your money up front with a reverse mortgage. The salesman told her that because he made a bigger commission that way. You can also get your reverse mortgage money in monthly payments for the rest of your life, or in a line of credit, so you only take out what you need when you need it. I redid her loan, and now she has the money back in a line of credit to use whenever she needs it for home care or unexpected expenses. She may never need it, and if so, she will never have borrowed it or have paid interest on it. This is an example of the loan officer purposely misleading the senior to make more money. The second way you can get hurt is by the loan officer telling you that once you get a reverse mortgage, you have nothing more to pay for the rest of your life. This has happened to many people in the past. The loan officer doesn't mention and impress upon you that you have to pay the taxes and insurance on your home. He just says you'll have no more payments for the rest of your life. Most likely, the loan officer actually knows that it will be difficult for you to pay them, but he makes the loan anyway. All mortgages, including reverse mortgages, require property taxes and insurance to be paid. Sometimes that money is collected monthly from the borrower by including it in a monthly loan payment. This way, the borrower doesn't have a large annual payment. I've seen a few people who didn't realize they were paying the taxes and insurance in their monthly payment. Now, since a reverse mortgage has no required monthly payment, there's no way to collect the tax and insurance money monthly. There are only a few things that will trigger a reverse mortgage loan coming due: not having the home as your primary residence, not maintaining the home as livable, not paying the taxes, and not keeping the home insured. The lender will get a notice if either the taxes or insurance are not paid, and if the homeowner is unable to pay them, the lender is forced to foreclose according to HUD and FHA regulations. Here, an honest, responsible loan officer would discuss with the senior that the taxes and insurance must be kept current, and make sure that the senior had means to pay them. If not, then some other plans should be made to make sure the senior has a place to live for the rest of their life. The third way, and by far the worst way, people get hurt by having a reverse mortgage is when the spouse is taken off the title to the home. This is usually suggested by the loan officer because the spouse, most often the wife, is too young to qualify for a reverse mortgage. Or the older homeowner by himself qualifies for significantly more money from the loan. What happens is that in a few years, if the husband dies, the wife inherits the home with a big loan that must be paid off. She has no way to pay the reverse mortgage off, so the house has to be sold, and she is left homeless. Recently, the government has established new rules to prevent the spouse from being evicted from her home. However, even with the new non-borrowing spouse rights, there can be problems getting the title back in the wife's name in time to comply with the new rules. It's not a good idea to take her or him off the title. These are the three ways that you can get hurt. In each case, it was not the reverse mortgage that caused the problem. It was the loan officer not acting in the best interest of the senior. First was the loan officer misleading the client to make a bigger commission. Second was the loan officer not being sure that the senior could continue to pay taxes and insurance, or making the loan knowing that the senior most likely would not be able to pay them. And the third was the loan officer allowing the spouse to be taken off the title so that he could get a loan or make a bigger loan, knowing that it's more likely the older person will die first, leaving the spouse homeless. These are the ways that you can get hurt by the loan officer when getting a reverse mortgage. The home equity conversion mortgage was designed to help people with certain financial needs and goals. Correctly applied, it can help you have a place to live for the rest of your life. But if used the wrong way, it can be devastating. So I would like to leave you with one thought. Don't get financial products like investments, insurance, and mortgage loans on the internet or over the phone from an 800 number phone salesman. Make sure that you know the qualified professional you're dealing with, where they're located, and how to contact them after the loan closes. And know that they are dedicated to doing what's in your best interest. And that should include telling you not to get a reverse mortgage if it's not right for you. For more information on this topic or anything to do with aging in place, Social Security, maximization planning, or reverse mortgages, please visit my website at charlesguinn.com. Other videos from me answer other questions in simple, easy to understand ways. For example, how are income tax, Medicare, Medi-Cal, and VA benefits affected by having a reverse mortgage? And what are the new financial and credit qualifications? You may want to subscribe to my YouTube channel and get the latest video. And for complete information about reverse mortgages and other aging in place related topics, please go to my website, charlesguinn.com. I hope this information has helped you. Thanks a lot for watching.